What's up everyone, it's Caddy with Money Investing. So in this video, we are going to be talking about real estate. So this is going to be a housing market update because there was a decline in the median home sale price in the United States. The first decline on a year-over-year basis in over 11 years. So we are going to be touching base a little bit on where the inventory stands, this number of supply, construction workers, talking about demand. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included, as well as the private videos and lectures and tutorials that are part of the Patreon as well. 16% annual discount that is available till the end of this month. So let's just dive right into it. This right here is going to be the chart where the median price of all types of homes sold in February at $363,000 was down 0.2% from February of 2022. So on a year-over-year basis, prices were down for the first time since February of 2012. So it's been about 11 years, and we are seeing the first year-over-year decline since February of 2012. And the year-over-year decline came despite a small uptick in the median price from January. So month-over-month prices were higher, but year-over-year they are now starting to crack down a little bit. So you can see that very, very small downtick in February of 2023. And the last time we actually saw that was back in 2012 when the prices were really selling off on a year-over-year basis. Now, if you go further into some of the other things, so median sold price for existing homes, so that has also fallen by 12.3% from a seasonal peak in June of 2022. So if we compare this from June to where we are now, just 6 months ago, prices have fallen over 12.3%, actually more than that. Yeah, 12.3% from that time. And at the time that we were at over $413,000 on a median home sales price basis, and now it's trading at $363,000. So there is definitely been higher mortgage rates. That has a lot to do with it. As rates creep up over 6-7%, buyer affordability starts to disappear because of the higher expenditure, because of the higher cost of borrowing. And as a result, as demand goes away, there is an abundance in supply. And as a result, you see prices come down. I do still think, though, the housing market is still pretty stubborn in the way that some of the houses are being priced. They are still not dropping. I'm constantly on Zillow. I'm constantly on Redfin. A lot of these places, I'm trying to look for properties both in the US and Canada, and prices are just not rolling over as quickly as what a lot of buyers would expect or would want. And this right here is going to be single family homes in different regions. So you'll notice that based on the seasonality adjusted annual rate, it rose 15.3% from January to 4.14 million houses. This is how many houses are available, which is still down 21.4% on a year-over-year basis. And sales of condos and co-ops, this is again sales of single-family houses to 4.14 million. And I think this is on an adjusted annualized rate. So this is on an annualized rate, and that is down from 21.4% on a year-over-year basis. So the expected sales for single-family homes is to be down quite a bit, and this is going to be the change from a year ago by region. 26% in the Northeast, 21% in the South area, and 19% in the Midwest, and 28% in the West. These are all declines on a year-over-year basis. And by region, year-over-year sales plunged in all regions, and percentage change from a year ago. And this is the map from the National Association of Real Estate. So again, that's a pretty significant map here. And median days on market before the property is sold or the seller pulls the property off the market at 67 days. And that's also up 50% from a year-over-year basis. And that's pretty much telling us that sellers are finding it more difficult to sell the property because the median days on the market are substantially higher from same time last year. So, if before it took a month to sell the property, now it's taking twice as long, if not more, to get that property out of the door in terms of, the days it's on the market. So DOM, days on market, pretty significant indicator of how well that property is doing, how much the interest is. And if there is, median days on market is well over 150 days, then it's definitely mispriced. There's a significant imbalance between what the seller is asking versus what the buyers are willing to pay for that property. And that's exactly what I've been seeing in North America as well, especially in some parts of Canada. Of course, we don't even want to get into Toronto and Vancouver, but in New York and other places, there's a lot of properties that are days on market plus 100 days that have just been sitting there in inventory, and buyers are not biting. Active listings. So right now we're sitting at 570,000. This is minus properties that are pending with sales that are up 68% from a year ago. So you can see the supply is now starting to come back in. So there are active listings that are going up, and sales might have been even higher were it not for the very still low supply. There were just about 980,000 homes for sales at the end of February. So this is, I think, including for excluding for the properties that are with pending sales. But if you take a look at on an overall basis, 980,000 homes for sale at the end of February, according to realtors, and flat compared with January. So month over month, no change, but year over year, we are seeing a pretty significant increase. And at the current levels, this is simply a 2.6 months worth of supply, and a balanced market between the buyer and the seller is considered a 4 to 6 months of supply. So it's kind of an interesting housing market where you still have, or you're still dealing with an environment where the supply is low, interest rates are higher, and the demand is starting to pull back because, we talked about US home sales. It's been declining quite aggressively every time it's happened. There has been a recession that follows. And of course, construction workers, residential building construction is still going strong. There's still momentum behind it. And new privately owned housing units under construction are still increasing. So this is going to be speaking to the supply. Supply is still going to, in my opinion, at least go higher. It's still going to go up. There's going to be more inventory in the housing market. There's going to be more homes being listed. So when you combine homes being listed on the market that's going up, as well as the days on market, the median days on market is also going up, and the demand side of the equation is starting to pull back because of higher interest rates, in my opinion, we will see more decreases in prices. We will see home prices come down, maybe not like a substantial amount, but I think this is just the beginning. This is the start of what we could see a significant more of a downtick in the median sale price for homes in the US. So right now we're sitting at 363,000. In my opinion, there is going to be a possibility where it also starts to roll over even more. It starts to come down as construction completes or finishes, and we see more inventory online, and at the same time there is a possibility of a potential recession as well. Of course, this is going to be building permits, and they are going down. So eventually you will find construction workers being laid off as the under construction homes are being completed. They're coming online, inventory increases, demand continues to go away, and that will bring us back to equilibrium in terms of median prices. But let me know down in the comment section below, what do you think about the housing market, the current state of the real estate market in the US? But my thoughts are that a little bit of patience in the real estate market is going to serve well over the next year or 2 years. If you are in the market for buying a home, of course, definitely be very, very careful and understand, the pros and cons of getting into a rate that's about 6-7%. But then, of course, depends very much on the area at which you're buying, or pretty much, what's going to be that, real estate market for that specific region that you are buying in. But personally, I'm going to be looking for median prices to fall over more. I think this is a good start for a downtick, for prices to roll over on a year-over-year basis. And I think we can see that more as inventory continues to go up, days on market continues to increase, demand continues to recede a little bit because of higher interest rates. And it's possible that we do see a substantial downtick in median home sales prices in the US. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. And also, if there is a potential recession at the end of this year, early next year, that's also going to weigh on the overall real estate market as well. And I think that can also, decrease the prices on a year-over-year basis for homes in the US as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe, and the link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.